So, welcome to today's presentation. My name is Peter Joseph, Senior Market Analyst at IronFX. In front of your screens, you have Euro USDs for our chart. All charts to be presented are to be of the same time frame. Mind you that we are going to be mixing technicals with fundamentals. And we are having a reopening of the market after a very, very long weekend, given that we had Thanksgiving in the US on Thursday. Now, there was a bridge holiday on Friday by many traders, which were absent from their desks. And then we had the weekend. Now, the interesting part I would be noting here is that more or less the USD seemed to be edging a little bit low on Friday. And we had practically the preliminary PMI figures, the S&P preliminary PMI figures for November. Now, the indicators showed that more or less economic activity in the manufacturing sector tended to contract once again, and that may have weighed a little bit on the US dollar. On the other hand, we have to note here also that we had some slightly better than expected readings regarding the services sector, which is considerable in the US. It should not be neglected. And more or less that may have countered any bearish tendencies, more or less. Now, the news are from Black Friday. And Black Friday in the US seems to have gone particularly well. I would be noting here that especially electronic sales tended to get a boost. And the main beneficiary sectors may have been electronics, as it seems. Of course, we have Cyber Monday with the momentum still ongoing here. So that's another issue. Overall, though, the fundamentals tend to be rather good here regarding consumption. And they may be sending more or less a more positive signal to the markets, especially I would be noting here US stock markets, which could be getting some support during today's opening. Overall, we expect the American opening to be quite interesting, both on a FX level as well as on a equities level. And I would be noting also, for equities at least, that, okay, this earnings season seems to have come and passed. So we may see some easing of market interest on that side. On the other hand, though, the positive news which came out of Black Friday and possibly Cyber Monday could provide some support for US stock markets and a more risk-on approach by the markets, which could exactly support US stock markets while it could lead to safe haven outflows for the US dollar. On the other hand, we have Euro's fundamentals. Now, we expect Lagarde to be testifying today. That's going to be interesting for Euro traders. And Lagarde, I would expect Lagarde to try to send out a clear message that, okay, the bank may not be hiking rates if not necessary, if there are no surprises, but may also send the signal that the bank intends to keep interest rates at high levels for a prolonged period, exactly in order to curb inflationary pressures even further and actually bring it even lower. Lower meaning closer to the bank's target of 2%. And should that be the case, we may see the euro getting some support. Other than that, I would be noting Germany's preliminary HICP rates for November that you heard on Wednesday. And should we see further slowdown of the HICP rate, that may more or less weaken the common currency somewhat, as that would more or less certify or verify, if you prefer, ECB's narrative that rates have reached sufficiently restrictive levels and could bring actual inflation down to the bank's target. Now, on a technical level, we note that Euro USD has been maintaining a sideways motion. This is the 4-hour chart, as we have mentioned. And we have been maintaining the sideways motion since the price action broke the upward trend line guiding it. That's since the 21st of the month. Note how the pair seems unable to form a higher peak. It's around at the same level here. Actually, one could note it as a double top. Let's drill into the daily chart. Yeah, it could be a mini double top here, yeah. And should that be the case, then we may see on technical level some bearish tendencies driving the pair lower, breaking this 1.0885 and start aiming for the 1.0685. Back to the 4-hour chart. Should we see the stabilization of the pair being maintained, then we may see it remaining above the 1.0885, a level which provided support here and here and resistance here and here. So that's pretty valid. On the other hand, a bullish outlook, say for example, should the US dollar continue to weaken, or should the euro get a boost from ECB President Lagarde's statements today, we may see Euro USD actually breaking the R1 1.1040 and start aiming for the 1.1265. For the time being, the RSI indicator, okay, it's not pretty high, but it's quite considerable. It's at 64, and it has breached above the reading of 50. So that tends to imply that there are some bullish tendencies within the market sentiment, which could provide some support for the euro side of the pair. Okay, let's have a look at GBP USD. Should be pretty similar. Let's have a look. Okay, this is the 4-hour chart. Let me clear this first. Let's reposition the labels. Now, in contrast to Euro USD, cable seems to be able to benefit more from USD's weakness, which may imply also a partial strengthening of the pound. Allow me to zoom in a little bit. And that actually shifts the upward trend line to the right, like here. So we tend to maintain a bullish outlook for cable, given also that the RSI indicator is actually at 68.9, almost 70. It has corrected a bit lower after breaching slightly the reading of 70, but more or less there seemed to be a stronger, slightly stronger bullish sentiment on behalf of the market. On the other hand, note how the Bollinger Bands have narrowed considerably, which may make any advance higher a little bit more difficult, given also that the pair had reached and breached actually the upper Bollinger Band and stabilized afterwards. Nevertheless, for the time being, given the upward trend line, we tend to maintain a bullish outlook. Note that we have continuous higher troughs and higher peaks. So that tends to lead us to an upward trend line. Now, should the bulls maintain control, we may see the price action breaching the R1 1.2645 and start aiming for the 1.2815. On the flip side, should the pair stabilize, given the low volatility, then we may see it maintaining a sideways motion between the R1 and the S1. Allow me to expand a little bit the upward trend line. And that may be putting the upward trend line to the test. Especially should it correct a little bit lower. For a bearish outlook, breaking the upward trend line is not enough. Okay, definitely a breach of the upward trend line would be signaling here an interruption of the upward movement, which is important as such, as it would be practically forcing also a switch in the outlook. But for a bearish outlook, we would require a breaking of the upward trend line once again, but also I would require a breach of the S1 1.25 and the pair to start actively aiming for the 1.2325. Nothing less. Our cable, besides the USD fundamentals, okay, I would be counting in on the pound fundamentals as a positive. The UK Finance Minister Hunt's autumn statement last week, it showed some tendency for an expansionary fiscal policy, and that was mostly due to tax cuts. On the other hand, there are some worries here as we have expectations, or at least the UK government seems to be aiming at reducing, or at least, I wouldn't say tolerate, but at least taming the UK national debt. So that may imply that expenditure may not be as wide as it may have wished for. Nevertheless, that's still a positive. The intentions of the UK government seem to be focusing more in the luring in of investments in the UK economy, and that could provide some slight support for the pound on fundamental level. As for financial releases, I would be noting the tick up of UK's consumer confidence. To tell you the truth, I haven't checked about the CBI distributed trades yet, but should that be the case and should the indicators reading improve further, that could provide another support for the pound. That should sum it up. Let's have a look at USD JPY. Okay, this is a mess. First of all, let's delete anything which is not of use. Let's zoom out. Readjusting the chart, repositioning the labels. See how the R148.80 has been broken. And at this point, we're definitely going to be turning that into support line. Note how it has provided support as well. And we're going to have to go search for a new ultimate resistance level. Let's zoom in a little bit, make it a little bit more visible. Look how the pair has breached the R1 and tested it once, twice. So that's now a valid support line. It's interesting how the level has provided support in the past. You can see it here as well. Locking it in, let's go hunting for a new ultimate resistance line. Going back, actually, let's drill into the daily chart. Weekly. Back to the daily. Okay, let's have a look. There's a nice peak here. Could go a bit higher though. This is a better peak. Okay, here we had the top of a day But at this point, we had a reversal of an upward trend line which lasted for 1, 2, 3, 4 days. Note the wide drop. It's pretty far back. We're talking about May 1990. So there's a big question mark on the validity. But it's the only one we have, so let's keep this. And it would be in red, the 153.85. Let's readjust the chart. Going back to the forward chart. Let's readjust the labels. Now, about fundamentals regarding the JPY, we would be noting here that one of the key drivers regarding the Japanese yen would be definitely the monetary policy of BOJ. And there have been extensive rumors and discussions actually, and there were some innuendos as well from BOJ for policymakers that the bank may be about to switch its monetary policy, its ultra loose monetary policy, and start normalizing that from next year onwards. Market right now seems to be pricing in the possibility of a rate hike in April next year, maybe May. But there were a number of analysts which have highlighted practically the January meeting as a pivot point, as a possible pivot point for BOJ to actually start switching from an ultra dovish into a more normalized monetary policy. And any discussions, any statements, any rumors which tend to support such a scenario tend to provide support for JPY. And at this point, it would be interesting to note that we will be having statements from BOJ board member Adachi on Wednesday's Asian session, and that could provide some support for JPY. Should BOJ's policymakers actually provide some comments which are in line with the market expectations about BOJ actually starting to more or less normalize its monetary policy. For the time being, though, on a technical level, we know USD JPY maintaining a sideways motion, that's clear. It's interesting once again how the pair has been able to get some support by hitting on the S148.80. On the other hand, it hasn't been able to create higher peaks. So we tend to maintain our bias for the sideways motion. And to that aid, we have also the RSI indicator, which is running practically along the reading of 50. It's currently at 49.1. Yeah. So that may be implying a rather indecisive market. Note also how the 50 and the 100 in orange, the 50 in green, moving averages have flattened out. Note how the Bollinger Bands have narrowed. All of that is indication of a possible sideways motion, which would be practically between the R1 and the S1, more towards the S148.80. Now, for a bearish outlook, and should, say, for example, the USD start weakening or JPY gain more traction, we may see the pair breaking below the S148.80 and start aiming for the S247.35. Note how that provided beautifully support. It has reversed, at least partially, this whole downward motion here, which was in the midst to the last days of November, till the 20th of November, and reversed it to an upward motion, even half there. On the other hand, should the bulls take over, then we may see the price action rising. Definitely, we would be needing higher peaks than this ones. And I would expect the price action to breach above the 150.30 and start aiming for the 151.90 level, which provided beautifully resistance here and had reversed or at least stopped the upward motion which was in play from the 3rd of November up until the 13th. Okay, let's have a look now at AUD-USD, another interesting pair. Definitely we have to clear this chart. Allow me, give me a sec. Now there's a big question mark here about the direction of AUD-USD. And that's better. And practically the big question is whether this pair is moving in a sideways fashion or has resumed an upward trend line. I would dare to say that we have some bullish tendencies here. And that's being practically underlined despite a breaking of the upward trend line here. Actually, we see a shift in a similar fashion like this. Could go even narrower from here on. If we assume that there was a correction lower here, then we may say that there is an upward, a very slight upward movement. I know that the slope of the upward trend line seems to be low. It's a big question mark in the sense that for a bullish outlook to be maintained, we would require practically the pair to breach above the R1 0.6605, which is currently providing a ceiling to the price action. And should the R1 be broken, then the next possible target for the bulls would be the 0.6725. On the other hand, note how the pair is finding some difficulty to breach the R1. So that may keep the bulls at bay, also given that the price action is flirting constantly with the upper Bollinger Band, and the Bollinger Bands have narrowed substantially. Despite some widening here, they are still way off between the widening which was experienced here or here. So volatility is quite low for the time being, which may once again force the pair in a sideways motion and stabilization. I would be noting the RSI indicator though, which currently is at 64. Okay, there are some bullish tendencies within the market sentiment, but I would like to see more confirmation on that. For the time being though, note the upward trend line guiding the pair. We expect it to breach above the R1 0.6605 and start aiming for the R2. On the other hand, a possible stabilization would be signaled should the pair drop, correct, whatever, breach the upward trend line, yet remain above the S1 0.6515, a level which provides support here, resistance here, and here. So that's pretty valid as well. Now, should the pair actually breach the upward trend line, yet remain above the S1 and below the R1, then we may see a sideways motion developing. On the other hand, for a bearish outlook, we would require the pair to breach the upward trend line, breach the S1 0.6515, and start actively aiming for the S2 0.64, a level which provided support here, but resistance also here. It was practically the upper boundary of a past sideways motion. However, for that to happen, we will have to see the RSI indicator dropping possibly below the reading of 50 and start aiming for the reading of 30. It would constitute a substantial switch in the market sentiment, given also that we have a number of moving averages. You can see here the 100 moving average in orange, the 50 moving average in green, and the median of the Bollinger Bands, which is practically the 20 moving average, all pointing slightly upwards to different slopes, but there's still a bullish predisposition here. Let's have a look at USD CAD. Okay, let's clear the chart. Readjusting it. Let's replace the labels. Sorry. Let's zoom into the chart a little bit. And at this point, we're seeing a downward trend line forming. I'm keeping it a little bit wide, but you can see that we have one peak, a second peak, a third peak, fourth, and going downwards. The same applies from here onwards, especially about the shows 1, 2, 3, 4. It's not a very clear cut. Practically, there's a distortion here. But the pair was able to breach even briefly the 1.3640. On the other hand, we see an RSI indicator which is rising and correcting after hitting the lows below 30. And it's now at the reading of 42.5. So that may imply some stabilization here. It's going to be interesting to see how the pair behaves. For the time being, though, we tend to maintain our bearish outlook, and I would expect the price action of USD CAD to breach the S1 1.3640 and start aiming for the 1.3480. Mind you that at the end of the week, CAD traders are expected to keep a close eye on the release of the employment data. Definitely, though, also the GDP rate of Canada is going to be quite interesting. Should the pair stabilize, I wouldn't be surprised to see a substantial correction higher, but the price action to remain between the R1 1.3790 and the S1 1.3640. For a bullish outlook, however difficult that may be, I would require the pair to rise, breach the upward trend line, but also breach the R1 1.3790 and start aiming for the 1.39. Once again, that's a remote scenario, but in our opinion, it's a possibility which should be covered just in case. Also, CAD traders are expected to keep a close eye on oil prices, given that Canada is a major oil producing economy. And there may be increased volatility for oil prices. By the way, let's have a look at oil prices, and especially WTI would be of interest. There you go. Downward motion being maintained. I think that's clear. Okay, let's have a look. Definitely we have a downward movement. There were a number of support lines which have been breached. And let's zoom in a little bit. And allow me once again to zoom out, sorry. Daily chart. Oh yeah. But there is a distortion here. Allow me to explain. Let's go back to the 4-hour chart. Definitely we have to switch our support lines to resistance and go hunting for new support levels. That's one. And you can see 1, 2, 3, 4, false break 5, 6 levels, which have practically provided support for the commodities price. So that's a pretty bad level, and definitely I'm going to be marking this true here, as that was a turning point of a substantial movement lower back up. Note also the gap here. It seemed like a breakaway gap, it wasn't, but it was very characteristic. Okay, that would be in green, 67.20, and also in green there are 3. Sorry, that should be in green once again. Done. Locking everything in. Let's readjust. Let's correct also the labels. Starting with the 80.10 as the final resistance line. R2 being placed at 78.25. Allow me to verify this. 77.25, sorry. The R1 at 75. The S1 at 70.60. The S2 at 67.20. And the S3 at 64.20. Now we've done a basic readjustment here. Zooming in on the chart a bit. However, I do note that the price action for the bearish outlook to continue will have to breach a lower true than this one, so it has to reach the S1 70.6, if not even breach it. Overall though, I'm highlighting the bearish outlook, and I'm highlighting practically on 2 factors. The first is the intense downward motion, which is underscored practically by the downward trend line, which had been started since, let's have a look, since the 20th of October. Okay, some may say that there has been an interruption here. I shifted to the right, I accepted it. And note how in the daily chart the RSI indicator is pretty low. It's at 37. While if we drill to the 4-hour chart, it should be also at pretty low. It's even lower, 35.5. So there is a bearish predisposition, if not tendency, within the market, which could actually drive the commodities price lower. On the other hand, note how the price action is flirting with the lower Bollinger Band. And that may more or less slow down the bear somewhat. Should the pair stabilize, I would expect the price action to remain around the 75 level and possibly breach the downward motion. While for a bullish outlook, I would require much more. I would require the pair to rise, breach the R1, breach the upward trend line, breach also the R277.25, and then if not reach the R380.10. Such a movement may more or less allow us to start drawing an upward trend line, which would be showing us also the possible limitations of the upward movement. I think tomorrow we should have a proper calibration. On a fundamental level, WTI's price seems to be revolving around OPEC's intentions and OPEC's meeting. May I remind you guys that there was a planned meeting for Sunday yesterday, which was postponed for Thursday, the 30th of the month. There seem to be negotiations between OPEC members, especially Saudi Arabia and African producers, which have not been fruitful so far. On the one hand, we have Saudi Arabia, which is also the largest producer in the bloc. And Saudi Arabia wants to keep production levels low, if not lower them even further, in order to actually get a boost of WTI's, of oil's price. On the other hand, we have African economies which are producing oil, and they're trying to have another strategy which is favoring market share. So we have here an effort to sell more oil, and definitely to sell more quantities of oil, you have to produce more, even at a lower price. I would expect that should any negotiations find a resolution, that would be in the expense of Saudi Arabia. Most probably it will be forcing OPEC to maintain its current production levels unchanged, which in turn, should Saudi Arabia actually desire to lower production levels and increase prices, will force it to actually lower it by itself voluntarily even more. Okay, let's have a look also at your stock markets, given that we have mentioned Black Friday's events. And this is S&P 500's daily chart. Nice upward trend line, which is about to be breached, if not has been breached already. Back to the forward chart, zooming in. Starting with the R3, now being placed at 4,660. The R2 at 4,565. The R1 at 4,452. The S1 at 4,372. The S2, which widens suddenly very, very much, at 4,225. And the S3 at 4,065. Now, definitely we need a recalibration here. And you can see how there were price levels which have changed the picture. Definitely this could go a little bit higher and be based on this peak here, or this could go also a little bit higher and be based on this show. So we're talking about the 4,270. So given that the upward trend line has been breached, we switch our bullish outlook in favor of a sideways motion bias for the time being. Yet, I would be noting that we may be seeing more or less the fundamental news regarding Black Friday providing a new boost to US stock markets, which could provide some support and allow it to breach above the 4,565 resistance line for the S&P 500. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Everyone, my name is Emily and welcome to another educational video. As part of our technical analysis series, we would like to look at the technical indicator called moving average. A moving average displays the average of data points across a predetermined number of time periods, typically price data. Because each data point is computed using information from X number of prior time periods, it is referred to as a moving average. Moving averages smooth the price data to create a trend tracking indicator by averaging previous data. Although they lag since they are dependent on historical values, they determine the current direction of the price rather than predicting it. Moving averages help smooth out fluctuations in market prices, filtering out the noise and making it easier to establish underlying trends. They also serve to alert traders to important changes in direction. Moving averages can be used to indicate potential support and resistance level, as well as the trend's direction. Additionally, they serve as the foundation for additional technical overlays and indicators, including Bollinger Bands, MACD, and the McClellan Oscillator. The most popular is the simple moving average. By calculating the average price of a security over a predetermined number of periods, a simple moving average is created. For a 5-day moving average, you simply add the closing prices of the last 5 closings and divide the sum by 5. You add each new closing and skip the oldest. A moving average is an average that moves as its name suggests. The average moves along the time scale as new data is added and old data is deleted. The method is the same whether you choose a 10-day average or a 40-week average. Rather than adding 5 days, you add 10 days or 40 weeks and divide the amount by 10 or 40 as appropriate. Thank you so much for watching us today, guys. See you soon.
Okay, I guess we'll just go ahead and get started now. So, first things first, as per usual, a disclaimer. So, products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of material is strictly prohibited. Okay, so I'm Melanie and I will be your speaker for today's webinar on support and resistance. So here's our agenda for today. Firstly, we'll be looking at using swings for support and resistance levels, followed by looking at where exactly you should place your starting points. And then we'll be going into pullbacks and overlaps and combining these two in order to use these with Fibonacci as well. Okay, let's get started. So firstly, we'll go into how exactly you can use swings for support and resistance levels. So support and resistance levels in trading basically refer to prices at which an asset's price tends to stop falling, which would be your support, or stop rising, which would be your resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, chart patterns, so on and so forth. Additionally, you can also look at previous highs and lows of the asset, as well as volume data to identify potential levels of support and resistance. So this is basically what we will be focusing on today. And it's important to note that these levels are not absolute and can change over time. So continuous monitoring is necessary. So I've added an image here for you to see how exactly we can use swing highs and lows as resistance and support levels, but we will go through it more in depth in the next few slides. So take note of how there are clear peaks and troughs in the market structure, and these areas can be used as your support and resistance levels. Okay, so firstly, let's look at an example of insignificant swings. So these are bad points to use for Fibonacci starting and ending points, but they're also not exactly good to be used for resistance and support levels. And I've shown you an example here in the GIF. So you can see that the price movements are really small and there's no significant swing highs or lows. Here's another example. So once again, there aren't really very clear swing highs or lows, and price movement is very small. Okay, and now let's take a look at a correct example of significant swings. So here you can see that there is a clear move up and down with obvious peaks and troughs and clear market movements basically. So in this GIF, that's basically what you are looking for when you are deciding on a chart to analyze on. So people may ask like which time frame do you use, which time frame do you recommend? And it's completely up to you. It depends on what kind of trader you are. So if you're a scalper, of course, a smaller time frame would be better. And if you are a swing trader, a longer time frame would be better. Okay, but still, when deciding which time frames to use, a important consideration is also the clear market structures. So you want to look for something like this, a clear market structure with significant swing highs and swing lows. Okay. Okay. So support and resistance. You can use these levels as take profit and stop loss levels, but you should not use it as an entry if there are no other supporting arguments, such as Fibonacci or other graphical levels to support your analysis. Using a recent swing high or a recent swing low is typically considered a weak level if it's just that level alone. So you can see in this GIF here, oops, in this GIF here, the recent swing high and lows, although they are significant, so you can see them very clearly, but they are not strong levels to use because we don't have additional Fibonacci levels to support them, and we don't have pullback or overlap support levels or multiple swing high or swing low support levels. So I'll show you what exactly I mean by that. So this is typically what you want to look for. So we're looking for multiple swings. So if at least two swing high or swing low levels line up nicely, these are typically much better levels to use. So you should try to find areas where these might line up, and it does not necessarily have to be at the exact same level because these tend to be areas more so than levels. So in this GIF here, you want to see how far you can, you want to see how far back your resistance or support line can go, and it's okay to cut through small wicks since support and resistance levels are usually in areas. Okay, so you can see here we have 4 swing highs that are about the same level, and we want to avoid cutting too many candlesticks, but if you're just cutting the wicks like in this example here, that's perfectly fine. Okay, so now that we know how to identify significant swings and use them as support and resistance levels, what are some things that we can look out for when inputting a support or resistance level? Okay, firstly, picking a starting point. So when picking the starting point of pivot, which is your entry level, support and resistance levels, these are typically your rules that you can follow. Excuse me. So firstly, we want to check if there is a swing high or low, and we've gone through those in the previous slides. We also want to look for pullback or overlap levels. So if you are wondering what exactly those are, I'll get into those in the coming slides. Next, we want to go as far back as possible. So as you saw in the previous slide, I did mention we want to try and pull it back as far as possible without intersecting too many bodies of the candlesticks. So we want to avoid cutting the thick part of the candlestick and just the wick. So just the little sticks on top of the candles, those are perfectly fine. Okay, so the orange thumbs over here represent an okay intersection. They're not preferred, but not exactly wrong. But preferably, we want to look for intersections that are only of the wicks, like over here. Okay, some more examples over here. You can see this thumb, this red thumb is what we want to avoid because it's cutting too many bodies of the candlesticks. So these green thumbs are what you typically want to look out for, where you are just cutting the wicks of the candlesticks. Okay. Okay, another example here. Similarly, this red highlighted area, it's not preferred because you're cutting too many bodies of candlesticks. Okay, yeah, so the green thumbs, again, just cutting the wicks of the candlesticks. So something like this, would have multiple swing highs. We can just stop the support, or in this case, resistance. We can stop the resistance level just at this green thumb here. And it would already be considered a pretty significant level because we have 3 swing highs that line up nicely at the same level. Okay, which is important because you can see that price has tested this level many times before. Okay. Next, let's go into the pullback and overlap. Let me know in the chat if you guys have are aware of what exactly pullback and overlap level is before I show you guys the next slide. Okay, I think yeah, because I do mention these a couple of times in our previous webinars, but no worries. Let's just go ahead and take a look at these. So firstly, we have pullback. So pullback, from the name suggests, we are expecting price to pull back to a certain level. Okay, so it's basically a strong level of support because it breaks out from a previous resistance level and price is now dropping back to visit it again. So in this case, we're just talking about the pullback support first. So if you take a look at the GIF, this is a pullback resistance. So just ignore that for now. Okay, pullback support is basically the opposite of that, where we are expecting price to retrace back to your support level. Okay, so a pro tip is when a pullback support lines up with a Fibonacci level, it's typically considered to be very powerful. For pullback resistance, these work well when it breaks a significant swing low and then starts pulling back to it. So it's even better, again, if there are multiple Fibonacci levels that are lining up with it. So here in this GIF, we have, okay, ignore the Fibonacci levels first because it is a little bit messy. But maybe I'll just refresh it. Okay, so here is our swing low for reference. Okay, so this is our swing low that we are using as a support level for now. But since price has already broken it and it's dropped below the support level, it's then a resistance instead. Okay, it's a resistance because we are expecting price to reverse off of that level. And that's why we call it a pullback resistance because we are expecting price to retrace back to the level and pull back to it. Okay, it is a little bit confusing, so let me know if you guys have any questions. But now if we talk about the Fibonacci levels. So here we are using a Fibonacci retracement. Okay, and I'm circling the 38.2 because it lines up nicely with my retracement. Once again, I have another retracement. In this case, the 61.8 lines up with my resistance, pullback resistance level. Okay, and now you can see that price really pulled back to our resistance and bounced off of it and headed downwards again. Okay. Okay, maybe I'll just let you guys watch the GIF one more time. So price has broken out of the support level, the swing low support, becoming a pullback resistance. Okay, and now that the resistance lines up with not one but two Fibonacci retracements, it's considered a confluence area. That's why I've highlighted it. Okay, and yeah, you can see price reversing off of the level again. Okay, so confluence areas typically are considered quite important levels because you have multiple Fibonacci levels or moving average levels or whatever that line up with your support and resistance. Okay, so those is basically evidence that price is likely to respect that level again. Okay, so here's an example. Firstly, I have 3 swing highs that line up nicely, okay, at this area, this red highlighted area. Price breaks out of the resistance area and it moves upwards. Okay, moves upwards, and once it breaks out of this area, it's considered a Fibonacci, it's considered a pullback support. Okay, basically, when you have a resistance, once price cuts or breaks out of the resistance, it's then the opposite. So then it's a support instead. Okay, so then we call it a pullback support because we're expecting it to pull back or retrace back to the level, as you can see from the dotted arrows here. Okay, another example. In this case, we have a pullback resistance. In the beginning, we have 3 swing lows that line up nicely. Okay, so swing low, we would think of a support. Now that price has broken out of the support level, it's then a pullback resistance instead. Okay, so the pullback resistance, we're expecting it to retrace back to that level. Okay, another example here. So we have a significant swing low here over the circled area, and thus it is a possible support level. But now that price has pulled back and it has surpassed the swing low support, it is then a pullback resistance. Okay, so now let's see if price pulls back to this resistance level. And you can see that it actually did. Okay, so price has reached the pullback resistance level just as we expected. And once it reaches and reverses off of it, it will then be called a resistance, overlap resistance level, which is what I'm going to get into in a little bit. Okay, okay. Next we have the overlap support and resistance. So an overlap support occurs when there are prices that touch the line from the top and from the bottom. So the more times that it reacts off of that area, the stronger the level is. So the reason for this is because it means that there are bulls and bears that are respecting that area, and therefore it's an important point to take note of. Okay, so once again, if your overlap area lines up with other elements such as Fibonacci or graphical elements such as your moving average or pivot points, for example, it will make it even stronger. So in this GIF, an overlap resistance happens when price touches it from the first point, which is over here, and from the bottom, which is here. Basically, when there is a swing low and a swing high that line up nicely in the same area. That's basically what an overlap level is. Whether or not it is a resistance or a support depends on what the latest, where the latest point touches the line. So if it touches it from the top, it is a support. If it touches it from the bottom, then it's a resistance. Okay, here's an example. So the swing low support becomes a pullback resistance once price breaks the support at this 105.643 level. Okay, so you can see in this GIF how price retraced or pulled back to this resistance level and in fact reversed off of it, making it now an overlap resistance. Okay, so you can see here the minute that price okay, here in the original image, price broke out of the swing low support. So once it breaks out of the swing low support level, it is then considered a pullback resistance. And once price retraces that level and reverses off of it, then it is a overlap resistance. Okay. Okay, let's move on. So now we're gonna combine both pullback and overlap levels. Okay. Excuse me. Okay, so here we have a big swing high resistance level. Okay, at the start, and price surpasses this level over here. Okay, so the moment price surpasses this swing high resistance, it now becomes a pullback support instead. Now price has made a pullback to our pullback support and has bounced off of it perfectly. So once price bounces off of it, it then becomes a overlap support instead. Okay, another example. So we have two swing highs that are lining up. You can see these purple circles here. And we have a swing high resistance from this. So price surpasses this level here, it breaks out of it, and then becomes a pullback support. Number 3, point 3, price has pulled back to our support and has bounced off of it twice. So the blue circles is where price bounced off of it. So once price bounces off, it now becomes an overlap support. Okay, I think by this time you guys probably have gotten the hang of it. So this is just my last slide, and then we will take a look at some charts. Okay, so once again, combination of pullback and overlap. Firstly, we have a multiple swing low here. Okay, 1, 2 circles here. Point 2, pullback resistance. Once price breaks the multiple swing low support, it then becomes a pullback resistance. And then it reverses, pulls back to our resistance, and reverses off of it 3 times here. Okay, so once price breaks out of this overlap resistance, it then becomes a pullback support once again. So every time it crosses the level, it basically switches from a support to a resistance or from a resistance to a support. Okay, and then 0.5, lastly, price has pulled back to our support and reversed off of it. So this level at the 33420, you can tell that it's a very significant level because price is continually retesting it. Okay, so what's important here is that because it's a pretty significant level, you can also expect Fibonacci levels to line up nicely with this this level. Okay. Okay, now let me pull out my trading view and then we can take a look at some charts together. Let me know in the chat if there are any specific charts that you would like to see. Okay. Okay, here are my charts. Okay, if there are no specific charts that you guys would like to see, I'll just go ahead and maybe analyze gold first. Okay. Oops. Okay. Okay, so this is an example of a really clear price movement. Okay, so we have 3 swing highs here, and you can see really clearly the peaks here. Okay. Okay. So we have a swing high, multiple swing high resistance here at this level. Okay, and we can see price reversing off of it. Okay, and this is on our weekly time frame. So we like to look at higher time frames first so that we get an idea of what the general direction of price is on a zoomed out kind of basis, and then we can compare with the lower time frames after. So once again, I'm looking at this on a weekly, daily time frame. Okay, and I can see that we have this decreasing trend line. So I think in our next webinar next week, we will be talking a little bit more about trend lines and trend channels, but I'll just briefly go through what makes a valid trend line. Okay, so what makes a valid trend line is if there are at least 3 touches on a trend line. And if it is decreasing, your trend line should be drawn, or rather, if it's a downtrend, your trend line should be drawn like this from the top. Okay, if it is a ascending trend line, then we can draw it like this, so from the bottom. Okay, but of course, this trend line is not valid because I don't have 3 touches on it. But this is basically what you are looking for a ascending trend line. Yeah, so sorry about my throat. The weather is getting cooler, so I'm feeling a bit under weather. Okay, so now let's look at the 4-hour time frame. So we typically like to analyze either on the 4 or 1-hour time frames, and how we decide between the two is, like I mentioned earlier, by looking at the chart structure, okay, the price structure. So you can see on our 1-hour time frame, it isn't really nice to analyze on, and the reason for that is because price movement is like pretty small. Okay, it's quite small. But if we look at our 4-hour time frame, you can see that we have much clearer price movements. So that's basically what we look for. Okay, so I'm gonna analyze this on our 4-hour time frame. Okay, let's see. We're gonna start off by identifying the trend. So we can all agree that this is a descending trend line, right? Or rather a downtrend. Now I'm gonna see if I can find any graphical analysis to support that. So I kind of have a descending trend line here. Okay. Now that I've done that, the next step is to go in with support and resistance levels. Okay, here is my my second support, second resistance. My first, okay. Gonna see if I can find a closer resistance level. Okay, this level here is my first support. Okay, and then my first resistance, maybe here. And then my second support just here. Okay, so maybe just a recap. So my second resistance, I have a swing high here and a swing low here. So it makes it an overlap level. And then I also have another swing low here. Okay, so I have bulls here and bears, both of these areas respecting my second resistance. So it's a pretty significant level, and that's why I have labeled that. Okay, and my first resistance, I just have a swing high here. Price has kind of broken out of these levels. Okay, so I only have a swing high level here. Okay, and that's the reason why my next step is to go in with Fibonacci levels to try and support these levels a bit more, or adjust them and see if I have any better levels to use. Okay, first support is because it's the closest swing low to where price is currently at. Okay, and it also respects a couple of swing highs and lows. Okay. Second support, the reason why I put it there is because we have this swing high here and a couple of swing lows here as well. Okay. Yeah, and it's also basically the closest level to my first support. Okay. Now let's go in with our Fibonacci levels. Okay, so here I'm using a Fibonacci projection. Okay, and for Fibonacci projection, we use these three levels, and we use the tool Fib extension. Okay, that's on TradingView. If you're looking at MT4, I think it's also this symbol, but I don't think it's called an extension, but it basically has 3 points for you to analyze. Okay, and for Fibonacci X projection, just to recap, if you weren't here for our Fibonacci series, we look for a flash. Okay, a flash or like lightning bolt kind of shape. Okay, something like this. Okay, here, even though you can see my 78.6 lines up nicely with my first resistance, this is no longer valid because price has already broken out of the level. Okay, so I'm just going to keep my 100% here. That lines up with my first support. Okay. Mm, okay. Here I can see that this Fibonacci retracement lines up with my 61.8. The 50% is no longer valid because price has already broken out of it. Yeah, so just my 61.8. Okay, and this is a retracement. So for retracement, we use the 5 levels that I was using earlier: 23.6, 30.2, 50%, 17.6, and 61.8. Okay, I think that's all the levels that we have here. Okay, I think that's all the levels we have for Fibonacci. So the next step is to go in with some indicators, and my favorite indicators to use are the Ichimoku and the MACD. For Ichimoku, I like to just look at the cloud, which is just the plots here. Okay, because if you look at all of the lines, which you can as well, but it is a little bit messy. Okay, so I like to just look at the clouds because at one glance, you can see exactly what the signals are. So if price is moving below the Ichimoku cloud like it is here, price is moving below the Ichimoku cloud, so it is a bearish signal. Okay, so it supports our analysis that price is likely going to continue to drop from the first support down to the second support. Okay, but over here, our MACD is giving us a bit of a bullish signal. You can see from the green here. Okay, and the reason for that actually could be because, as I mentioned earlier, our first support is here. Okay, and it's a pretty significant level with the swing highs, the swing lows. So it's an overlap support, and we can expect price to come back and retest this level, which is doing now, as you can see. And on top of that, we also have this 100% Fibonacci projection. Okay, that has not been it's not been surpassed yet. So we're still seeing price test this level, but because of the downtrend from this descending trend line, we saw on the daily, the weekly timeframes that price is still pretty bearish on those levels, on those timeframes as well. So we can expect price to continue to drop towards the second support because of all the downward pressure. Okay, but for now, it is still testing our first support. Maybe we can use another indicator. Okay, let me know in the chat what indicators you guys like to use. Okay, I like to use these three. Okay, on our RSI, we're also seeing a decreasing trend line. So it's also supporting our bearish signal here. Okay. Let me know if there are any questions. Oops. Okay. If there are no questions, I think we still have time for one more chart. So if you guys don't have any requests, I'll just go ahead and do maybe the Aussie dollar, because we recently saw the RBA releasing a cash rate statement. So let's take a look and see how price affected the charts there. Okay, so same thing, I'm gonna analyze this on a weekly chart. Okay, let's see. Yep, we have a descending trend line on our weekly time frame. Okay, next, if we take a look at our daily time frame, also descending trend line here. Okay, remember the three touches here. Okay, next on our 4-hour time frame. So once again, I'm deciding between 4 or 1 hour, but both of these charts seem to be pretty clear. Maybe I'll just go ahead and analyze this on a 4-hour time frame. Okay. In this case, I don't really have a descending trend line, I think. Yeah. Let's see. Okay, I don't really have a descending trend line here. Okay, but we can definitely see that the trend is downwards. Okay. Now, I'm gonna go in with my support and resistance levels. Okay, this is my first resistance and my first support, maybe just here. and my second support here. Okay. Now we'll go in with some Fibonacci levels again. Okay, we don't really have very nice levels here. Okay, my 100% level lines up with my second support. Let me see if my 78. Okay, it lines up, but it's no longer valid because price has already broken out of it. Okay, so just my 100%. Next. Okay, I think my 38 lines up, yep, with my first resistance. Okay, my 61.8 also lines up with my second support. Okay, so you can see here I have a confluence lab area here. Okay, so what I'm doing here is I have recognized this Nike tick shape. So it's upside down, but this is the shape that I'm looking at. Okay. Yeah, so for this, we are using the Fibonacci extension tool. So it's the same retracement tool, but instead I'm looking at the 127.2 and 161.8. And I can see that both of these levels line up with my second support. Okay, and I feel like that's one of the reasons why you can see this reversal of the first support here. Okay. Okay, now let's pull out some indicators to support our analysis. Okay, price is moving below the Ichimoku cloud. So it's giving us bearish signals. MACD is also giving us a bearish signal, so we can expect price to continue to drop because of all the downward pressure. Once again, our indicators are also supporting this. Although we are seeing this rebound off of the first support, as I explained earlier, it's likely because of this 127 and also because of the release of the RBA cash rate. Okay, but yeah, there's a lot of downward pressure, so we can likely expect it to continue to drop towards our second support. Okay, confluence areas also tend to have confluence areas also tend to attract price. So we can expect price to reverse off of it, but we are also expecting price to be attracted to this area. Okay, so areas like our second support, where you have the 100% Fibonacci projection, 61.8% Fibonacci projection, and this huge swing low here. So we can expect price to continue to drop here. Okay? Any questions before we go? You have to include the wick in swing high and swing low in putting resistance and support. For Fibonacci, I feel like it's good practice to include it. But for support, swing high and swing low and putting for resistance and support levels, it doesn't really matter because as I mentioned earlier, it's more so levels, areas rather than levels. So you can see here, even though I didn't include the wick here, right? Okay, let me zoom out. But you can see I actually highlighted this area here because of my Fibonacci levels that line up nicely. So for these support and resistance areas, I am expecting them to be areas more than levels. So yeah, it doesn't really matter for support and resistance levels. Okay, I hope that answers your question. Okay, any other questions? Okay, if there are no other questions, yep, no worries. Thank you guys so much for joining me today. I hope you guys found this helpful. And for part 2, I'll see you guys next week. Thanks, everyone. Have a great rest of your week. Bye.